Hey guys, Luca here. Thanks for jumping into another video. Today we're diving into Bitcoin, its current market structure and all the uncertainties around tariffs and what they could mean for the markets moving forward. As always, if you enjoy the content, don't forget to give this video a thumbs up and make sure you're subscribed to the channel so you never miss out on future updates like this. Now let's get into it. Now looking at the latest tariff headlines, we see that Trump's 50% steel tariffs could make the prices in Europe tank and the prices in US soar. The reason for that is the corporations in the US pass costs to the consumers so they keep their profit margins intact, which leads to artificial higher prices. Now this is something a lot of people have been worried about, especially with tariffs, because if they are truly implemented, then they could lead to a stagflation period, where there is a high inflation rate due to the artificial higher prices. There's a low economic growth because consumers and businesses no longer afford to pay those high prices, case in which tariffs actually become deflationary over a longer period of time. And also that leads to an unstable labor market if companies can no longer keep their profit margins intact. This is also what made the prices crash in February and March and early April and led to all of those recessionary fears we've seen back then. So now it's time to see how market makers have used these headlines to make retail their counterparty. So moving to a post I made back in early April, it seems like a lot of people have forgot what these headlines have been used for and how market makers have used them to make retail as their counterparty. Each time there has been a liquidation cascade on the low time frames, what triggered it was a tariff announcement. So you see here, every single time the correction was triggered by a tariff announcement. And we've seen this over and over again. We've seen the series of untapped lows developing on the low time frames, which eventually preceded a tariff announcement, which led, of course, to a liquidation cascade. This is a thesis I've covered many times at the time, because that's how I believe market makers have managed to accumulate and create for themselves an artificial counterparty. And I think that this may be happening once again, but not exactly. So let's now move on to the charts and see my thesis on the role these tariff headlines play. So moving back to the charts, as I mentioned earlier, we had these liquidation cascades that developed over the last couple of months back in early 2025 that have preceded each of these liquidation cascades. Now, the reason why I thought these liquidation cascades were happening in the first place was because that's how market makers can accumulate. Because with these untapped lows that were developing on the low time frames, traders basically set their stop losses right at the nearest low, which would be this one. Now, when we have this happening multiple times, for example, if I would enter a long position here, I would set my stop loss over here. So there were a bunch of stop losses that were sitting at those levels, and a stop loss of a long position is equal with a forced sell order. So once a tariff announcement or a tariff headline came out, then the prices dropped, triggered and swept all of these untapped lows and all of the stop losses that were sitting there. They triggered all of those forced sell orders, which represent the perfect counterparty for market makers who are trying to accumulate. Now, we've seen this happening over and over again. And when we reached early April and March as well, that's when a lot of people felt really anxious, really frustrated, and have capitulated. This is where a lot of people have increased their cash positions to prepare themselves for lower prices. But that's also where the prices have bottomed. Therefore, we saw this bottom forming, and then this is where it gets really interesting, how the price has reversed. Because instead of seeing this impulse up, then a corrective move, which would look like a normal market structure, to me, this would look like a first impulsive wave 1, then a corrective wave 2, which would eventually precede the next impulsive wave 3. This is how a normal market structure should look like. Instead, we've seen these very shallow consolidation phases that have preceded each of the moves up so far. So we see here exactly what I think is currently happening right now, which will precede the next impulse up. Now let me explain to all of you why I think this is currently happening. If retail investors have increased their cash positions at these levels, then they have waited for a pullback, something similar to this, in order to buy, right? Because nobody wants to buy here because they feel like it's the local top, so the prices are going to go lower on the short term. But unfortunately, what has happened is we didn't get any pullback, and retail have waited, and are now waiting once again in this range. Therefore, they didn't get the opportunity to buy. So they have always waited for lower prices to buy. Now, the thing is, now they're doing it once again because they feel like, okay, the price is currently sitting right at a prior all-time high. It has been consolidating right around this range. So I'm not going to buy here because we could see a short-term pullback in the coming days where I would look forward to buy. Or even a lot of people have started to believe in the idea that we may be repeating something similar to 2021 when the price has swept this high, and after that we have basically entered the bear market, as we see here. And a lot of people have started to believe in this idea. A lot of people have highlighted a lot of bearish confluences on the charts. But what's truly fascinating to me is the fact that so many investors are currently waiting for lower prices. So they have not learned anything throughout this rally. When we were going up like this, we had these consolidation phases that have preceded each of the moves up so far, right? So a lot of retail investors, especially those who are sidelined, are looking at this and saying, okay, I'm not going to buy here. Instead, I'm waiting for a deeper pullback, something similar to this, before eventually we could see another bounce to the upside. That's the basic retail mentality, right? And I'm not saying that something like this could not happen, but betting on this, especially if you're sidelined, is a bad idea. And let me explain why. Back in 2024, we've seen something very similar happening to this. And I've explained this thesis many times before, but I feel like it's one of the most important yet overlooked perspectives out there. So we had the extreme fear phase where a lot of people have capitulated. We all remember the 5th of August crash with the yen carry trade and so forth. A lot of people have started to believe in the idea that the cycle top was in here and that Bitcoin was entering a bear market. That's when a lot of people have increased their cash positions to prepare themselves for lower prices. But then the markets have bottomed and we start to go up. Now, instead of buying and trying to get into the market before the prices would eventually go higher, this was a disbelief rally, meaning that nobody really believed that that was the true reversal. So because of that, they continued to wait and didn't really buy until it was too late. Here they said, no, we're going lower, we're going something similar to this. This is a dead cat bounce, so forth. Then they have waited for a deeper pullback at these levels. Now we're going here, I want to bid in this range. I'm waiting for lower prices. But this led to this emotional gap that formed. This major rally that was a very rapid transition from a state of disbelief to a state of full-blown euphoria. Meaning that after they have increased their cash positions here, they didn't really get the opportunity to buy at these levels because this was a disbelief rally. A lot of people thought that that wasn't the true reversal or that Bitcoin had topped out already, and they were waiting for lower prices, either on the low time frames or even on the high time frames. Then we had this emotional gap that has formed. And once we reached this emotional gap phase, that's where a lot of people have started to buy in. But at that point, unfortunately, it was too late for them. The distribution phase was already in place, and that's also where market makers have started to distribute, as this phase has preceded this later on consolidation phase and this drop in early 2025. Now we're seeing something very similar to this. We've had the extreme fear territory. Now we're having the disbelief phase where a lot of people are highlighting bearish theses, where a lot of people are highlighting bearish narratives, tariff headlines. We have the 2021 fractal. We have some bearish confluences developing on technical indicators. So if we bring out the RSI, we see here that there is weakness developing on the 8-hour time frame here, which has already played out. As we see, the RSI has dropped. Something very similar to this has happened here once again. So there are a lot of bearish narratives right now on the timeline, which if you're a retail investor, if and you're looking at this, you might say, no, I'm waiting for lower prices. I'm waiting for a deeper pullback before I buy, before I enter into the market, because buying here close to an all-time high isn't a good idea. And I'm not saying that it is, but what I'm saying is, if you're still sidelined, first of all, it's your fault because you didn't buy here like I did. Like I publicly announced that I had the lowest cash position since the 2022 bear market lows. But second of all, if you're still sidelined, then you must add exposure. Because I think a very similar emotional gap will also form in the coming weeks. And this is the exact phase that precedes it. Whether we go lower on the low time frames or whether we bottom out here, I don't know that. But I believe that in the next couple of weeks, we'll have a very similar emotional gap to the one we've seen back in November. And that will lead to this major full-blown euphoria phase where a lot of people will start to FOMO back into the markets. But at that point, of course, it will be too late because then the distribution phase starts. And this is where market makers will start to distribute. So it's all about liquidity. Here, market makers had liquidity to accumulate because they have used retail as a counterparty through those liquidity traps, through those liquidation cascades we've seen here with the tariff announcements and so forth. Then we had the extreme fear territory where a lot of people have capitulated and sold their spot positions to increase their cash exposure to prepare themselves for lower prices. And then they didn't really get the opportunity to buy. They have waited for lower prices. Now they'll have to FOMO back into the markets. But at that point, unfortunately, I fear it may be too late. Because at that point, I think the markets will eventually roll over. Once again, I expect that the next narrative will be around soft landing and additional rate cuts and the end of quantitative tightening. As we've seen last week, the PC year over year came in at 2.1%, which marks the lowest level since September of 2024. Which is right around Fed's target. Therefore, I think that in the next couple of weeks, the Fed will finally declare their victory against inflation and announce that they're going to step away from their quantitative tightening measures. That, I think, could be the macro catalyst that will act as this very strong narrative to the one we've seen back in November. Here we had Trump. Here I expect we'll have soft landing, the end of quantitative tightening, additional rate cuts, new liquidity that would enter the markets. And a lot of people will start FOMOing at these levels because of that reason, because they think that new liquidity is going to enter the markets and that should theoretically push the prices of risk assets much, much higher. But I think that they're going to be wrong. And the markets would have already priced in that. And this is where retail investors will start FOMOing in because of the bullish narratives. But once again, at that point, it will be too late. Now moving to the on-chain data, we have the open interest and the price action. One of the most important things throughout this consolidation phase is that it has the role to bring down the open interest. It has the role to flush the leverage positions. It has the role to shake out the impatient investors. And there are a bunch of them. We've seen James win using excessive leverage and losing all the money he had. And this is just a basic example of the retail mentality throughout these consolidation ranges. They have the tendency to over leverage themselves in a very tight range, similar to this one, where there isn't a lot of volatility, there isn't a lot of price action movement to trade it. Instead, there is this very boring price action which doesn't lead to anything if you're gonna trade it. It leads only to impatience, it leads only to mistakes, and we've seen this beautifully illustrated in the open interest, which has been going down over the last couple of days because leverage positions have been getting liquidated. And this is one of the most important things we want to understand. These ranges aren't for trading. These ranges are for stepping back and reflecting on the broader market picture. So because of that, this is what I've done over the last couple of days, as I publicly announced my decision to de-risk a couple of days ago when we were going up. And now I have started to DCA back in, and I'm not waiting for much lower because the risk reward is starting to be in favor of the buyer. So whether we have another leg lower in the next couple of days before we eventually have this bounce to the upside, I believe that the risk reward is starting to be in favor of the buyer from these levels. Therefore, I want to position myself for the next move up, and I'm not going to wait for much lower. Mostly everyone was euphoric at these levels a couple of days ago, and now they became fearful because all of those bearish narratives have emerged. Therefore, I want to position myself for the next move to the upside before I de-risk everything and I get completely out of the markets. But this is another topic that I'll discuss in one of my upcoming videos, my strategy to de-risk in the coming months and where I will rotate my profits next. So make sure you stay tuned for that as well. And with that being said, this is my current interpretation of the latest tariff uncertainties and how I think market makers are using these headlines to make retail emotional. This has been the video for today. As always, if you've enjoyed it, don't forget to give it a thumbs up and make sure you're subscribed to the channel so you never miss out on future updates like this. Thank you all for watching, and I'll see you guys in the next one.